On set is John Koudanis, President and CEO of Calamos Investments, and it's great to have you. Welcome.
I'm glad to be here. Thank you very much.
All right, so why launch this product? Why launch it now? Who are you gearing it towards?
Well, Bitcoin is obviously very popular. It's been the highest returning asset class for a long time now, but not everybody's been involved. There's a lot of people that are scared. The volatility is huge. And so this is a product that we're risk managers. We've been doing that. It's in our DNA for the last 47 years. And there's two things. People that haven't gotten involved that want to do it in a risk-measured way, and people that are involved that are thinking, have we reached the top? It just like you said, it hit 109 just a couple of days ago. Where's it going? So this is an opportunity for people to play in Bitcoin in a risk-measured fashion.
Now, I realize Bitcoin is very, very volatile. And we'll get to the other crypto assets in just a moment, because to me, that's almost a whole different piece of the puzzle. But Bitcoin's very, very volatile. But if you look at a chart over the past 8 years, it has been a march higher. So yes, it's scary when it's volatile and it's falling, but also when it's volatile to the upside, it can be very dramatically so. So to have a Bitcoin that limits the downside, what's the catch here? Is it the fact that it limits the upside as well? Absolutely.
So today we've launched the first 100% protected on the downside, and we're going to set a cap rate right now as we speak. From what I heard, we thought the range would be anywhere between 10 to 11.5%. I think we're going to hit the 11.5% or maybe even higher, where you can get up to 11.5% of the upside if you keep the Bitcoin for a year. And if it falls 50% or whatnot, you don't lose anything. You get just your principal back, and you can roll it year after year. And we're also, in 2 weeks, launching other products depending on your risk parameters. So we're going to have a 90% protected ETF. So you can lose up to 10%, but the cap rate should fall around 30%. We're also going to launch an 80%, so you can lose maybe up to 20%, but the cap rate goes all the way up to north of 50%. So depending on your risk parameter, whether it be no loss versus just taking a little bit of risk rather than being completely long Bitcoin where it's extremely volatile, I think we're seeing a lot of appetite for this type of product.
And you got to hold for a year.
You can sell it and buy it at any time you want, but you're guaranteed 100% protected if you do hold it, because the way we strike the options and buy them for the year.
So this is, in a way, it sounds to me like insurance.
Correct.
Right? So really the risk for you is calculating how Bitcoin has moved in the past. And if it were to just go straight down, right, for a year plus, well, that wouldn't be good. But based on how you've seen it move, you can make the adjustments during that time that, make sure that you're able to make good on the promise to those who need it.
No, we make good from day one.
Okay.
So the way the product works is we'll buy today. We're going to buy, zero coupon treasuries, right? And then we buy options on the CBOE Bitcoin index, right? So we buy call options at the money, and we sell call options as well out of the money to generate income to make up for the coupon for the zero. So you're locked in, guaranteed rate of the upside of 11.5%. for the year if you keep it.
Which of these do you expect to be the most popular?
It depends on people's risks. I think maybe some of the people that are retired will go into this type of product. It's 100% protected. But I think, other people want a little bit of risk. Look, if you're going 80% downside protect, only 20% up, but could get up to 55% of the upside, that's pretty good. And I think even not just the retail is going to be looking at that, but I think institutions are going to look at that as well.
So if we just step back for a moment here, we played a soundbite from Jamie Dimon at J.P. Morgan earlier today. He was talking about valuations, particularly in the U.S. markets. You've got this new product in Bitcoin, but obviously you have many other products too, billions in assets under management. What is your take on the markets and assets more broadly right now?
Well, I think it's all about growth and the optimism and where the markets are going right now. And I think this new administration has been very, very promising and optimistic, as we're seeing it through I'm not saying anything out of school, you're seeing it with where the markets are going in the last couple of days, right? And so when you have less regulations, you're taking some of the handcuffs off for people to do business. And I think that's having an administration that's a lot more pro-business, creates pro-growth. And I think the word at Davos, if you I listened to Jamie this morning, everybody's talking about growth in the United States and how we're going to lead the world, and everybody's the envy of the United States because of the future and the growth that we're going to see here.